Welcome to Petros Family Wealth. Today we're going to talk about life insurance in retirement. I recently just had a meeting with a new client that just came on, and they were asking, do we actually need any life insurance now that we're close to retirement? And the short answer might be likely no. But what I am going to do is I'm going to cover 3 reasons why you might still want to have some life insurance in retirement and what it would do for you. So with that in mind, let's go ahead and dive in. As I go through some of these reasons, I just want to share that this is not a recommendation for you specifically or for your family. This is purely just educational in order to arm you and educate you and help you become a better wealth manager for you and your family. But the first thing I want to touch on for reasons why we might want to have life insurance, and the first one may actually surprise, it's actually to help cover long-term care expenses. And specifically, the reason or some of the situations that I've seen where it makes sense is if a client is still relatively in good health, but they have a number of old cash value life insurance policies that are life insurance focused. And if you know anything about the long-term care insurance industry, it's been pretty rough. Just recently, there's been massive increases in premiums for some of those older traditional policies. And I bring this up because nowadays you can have a life insurance policy that prepays the death benefit if you have certain medical conditions. And that can help fund some of long-term care expenses. And I probably should have mentioned this before, but here at Petros Family Wealth, we don't provide life insurance. We are investment advisors, fiduciaries, and fee only. So we wouldn't be able to provide life insurance because that's all commission-based. But we can give advice and ideas and share connections to help implement some of the strategies we put together. But just so you know where we're coming from, we don't get compensated on life insurance at all. But as far as a long-term care focused life insurance policy, again, you might have an old cash value policy and you don't necessarily need the death benefit. And so we redirect it towards a long-term care focused life insurance policy. And the benefit of that type of policy is that it pays out the death benefit either at the passing, or many times you'll have certain criteria where if, let's say you can't do 2 of the 6 activities of daily living, they're called, or ADLs, things like bathing, toileting, eating, transferring out of bed, those types of things. If you're not able to do one of those, well then that death benefit, they might start paying out just a flat dollar amount, which would be called a chronic illness rider. Or there might be a reimbursement basis, which is a kind of a traditional long-term care type of policy where there's a certain expense and then that death benefit, let's say it was $500,000, the $5,000 of expenses now reimbursed to that client and helps pay for some of those bigger expenses. So that's reason number 1, is to essentially transfer the goal or the purpose from a life insurance focus over to a life with long-term care type of help and assistance. The second reason to potentially have life insurance in your retirement is for estate planning purposes. Particularly here in Minnesota, there's a $3 million limit on wealth before potentially be taxed before it transitions to the next generation. So if you have a home, some of your investments, life insurance that's not in a irrevocable life insurance trust, those are all part of somebody's estate. Usually this is kind of the first tool we might use to help avoid or move around the estate tax limit for a given state, and where we have a life insurance policy in a irrevocable trust outside of the estate that pays out to the kids and can achieve any legacy or estate goals that you might have as far as transferring that wealth in a estate tax-free manner. The third situation we've come across where life insurance makes sense in retirement is in particularly around replacing either Social Security or more often pension. So there are situations, and I would say it's from what I've come across, maybe like 40% of the time, it may actually make sense to adjust how we take somebody's pension and incorporate life insurance to have a better outcome for the client. So, for example, if somebody's about to be retired and they have a pension, they might have a pension that pays $3,000 a month every month just for that individual's life. But if they have 100% benefit transfer to their spouse, usually then that longevity or likelihood of that pension having to pay longer occurs, and so then the benefit might be $2,500 a month instead of the $3,000. And so there are situations where it may make sense to take the $3,000, the higher amount, use some of that savings to buy a life insurance policy, and that whereas if somebody were to pass away, that life insurance then pays out or essentially replaces the income from that pension. And so those are the three situations I've seen where life insurance makes sense in a retiree's total plan. If you'd like more specific or ideas, feel free to reach out. Happy to chat more or leave a comment, question here below. Love to connect. And if you did enjoy, please go ahead and like, subscribe, and hit our notification button. Thanks so much.